What's up guys and welcome back to Wall Street Millennial. If you're new to the channel, we make videos about stocks, options, and everything related to investing. Today we're going to be going over some of the greatest gains and losses on the Wallstreetbets forum over the past week. First off, we have China W Swing, who lost almost $20,000 or more than negative 500% by selling one put option. Luckily, he hedged part of this position by buying a put at a higher strike price. After the hedge, his net loss was $9,205. This Robinhood user thought the theta gang strategy of selling puts would yield him stable, consistent gains. When you sell a put, you collect a premium upfront, and as long as the stock doesn't fall below your strike price, you keep the premium. But if the stock does fall below the strike price, you are liable for a loss equal to the strike price minus the share price. Taking the example of Tesla, the July 16th 860 strike put is currently trading at $183.50. If you sell it, you will collect the $183.50 upfront. The break-even price is $676.50, so as long as Tesla stock doesn't drop below this price by July 16th, you will make money. Selling out of the money puts is supposed to be less risky because most of the time, the stock will close above the strike price and you'll keep the premium as pure profit. But this strategy only works if you can pick a stock that has a very low probability of tanking below your strike price. Unfortunately, it doesn't always work out like that, and when it doesn't, losses can be substantial. This Wallstreetbets user sold puts on Sarepta Therapeutics for a 115 strike price. This means that if the share price goes below 115, he starts losing money fast. On January 8th, Sarepta Therapeutics stock tanked more than 50% to $82, blowing past his strike price. This came after they released results for their highly anticipated muscular dystrophy gene therapy. While the trial did show a large increase in the dystrophin protein, this increase failed to cause statistically significant improvements in muscular function after 1 year. While this result doesn't necessarily mean that their therapy is a complete failure, it means its release will at the very least have to be delayed by a couple years as they make improvements to the therapy and go through another trial. This unfavorable news sent the stock tanking, which translated to a loss of over $9,000 for this Wallstreetbets user. This goes to show, if you plan on selling puts for long-term consistent profits, it's probably not a good idea to choose pharmaceutical stocks as their stocks are vulnerable to extreme volatility when they release drug trial results. If you want to sleep easy at night, it is much safer to sell puts on boomer value stocks that are pretty stable over time. Next up, we have user Gyudge, who shares some of his most impressive gains on options plays from 2020. He made $435,000 in a single day off Amazon and SPY calls. Amazon has been a strong performer throughout all of 2020, but this options trader was especially adept at timing the market rebound from the pandemic. On May 12th, he bought 1,720 strike calls on Amazon, expiring the next day when the stock was trading around $1,676 per share, about 2.5% below the strike price, with 1 day till expiry. On the next day, Amazon closed at $1,785 a share, making the calls payout $65 per option. At the time that this Wallstreetbets user took this screenshot, those calls were worth about $48 and had already printed $241,000 collectively. We don't know what the cost basis was or how many calls were held, but if we assume that they cost about half of what they were worth at the time of this screenshot, then that means that if this user held till expiry, the calls would have increased another $16 per option, which would have printed another $120,000 of pure profit. Not bad, Jeff. Next up, we have the unfortunate story of the man who created Dogecoin, Jackson Palmer. Jackson Palmer created Dogecoin back in 2013 when he was a software engineer at Adobe. He created Dogecoin as a joke in response to several Twitter mentions encouraging it, alongside IBM engineer Billy Marcus. As the creator of a new cryptocurrency, he had the ability to allocate himself as much Dogecoin as he wanted at the time of creating it. For example, the creator of Bitcoin, known as Satoshi Nakamoto, allocated himself 5% of all Bitcoins when he or she created Bitcoin, and is now worth $20 billion from it according to Forbes. Not bad if you can get your cryptocurrency to become mainstream like Dogecoin. Dogecoin most recently was trading at a market cap of about $1.25 billion. So at the same rate of 5% given to himself, Jackson Palmer would have $62.5 million worth of Dogecoin. That's more than the price of this private island in the Caribbean, with enough left over to buy a brand new Bugatti with the remaining cash. Unfortunately, however, Jackson didn't do that and has never seen a cent from his billion-dollar creation. But who knows, it seems like Jackson Palmer might be above materialistic things anyway. Next up, we have Robinhood user Nelson Tingles with a very nice $14,000 gain in 1 day and $30,000 gain all time. He made these gains on the iShares Global Clean Energy ETF, ICLN. This ETF includes some of the biggest meme stocks of the year in its top holdings, including Plug Power, the hydrogen fuel cell company. Because of the EV craze of 2020, many of these stocks have done extremely well, and as a result, ICLN has increased in value by about 300% since its March lows. This Wallstreetbets user says that because the theta on 45 strike long-term calls is about 0.45, meaning that a $1 change in price in the ICLN ETF causes approximately a 45-cent change in the price of the option, while the theta is only 0.01, buying these long-term calls is a no-brainer. The theta of 0.01 means that each day, the option loses about 1 cent of value just based on the time value of the option. Of course, this effect is hard to isolate because changes in the stock price have a much bigger effect on a day-to-day basis. But the point is that the cost of leveraging up on these options is very low. Based on the current price of the option and the current price of ICLN, the break-even price if you were to buy it at the time of recording this video would be $45 plus $5.45 or $50.45. ICLN is currently trading around $33.16, which means the break-even price is 52% above the current levels, with a little more than a year to get there. In the past 51 days, ICLN has increased that same percentage amount, so if you think that ICLN can maintain its current trajectory, these calls would break even more than 10 months before expiry. Make sure to perform your own due diligence before buying though. Next up, we have user Cave Repka, who posted a screenshot of a 90% or $54,000 loss on GameStop January 15th calls. GameStop has reached true meme stock status this year, as it has more than 5x since the pandemic lows. GameStop stock appears to have been driven by retail buying, as its price movements closely track Google searches for GameStop stock. But with any meme stock, with great returns comes great risk. This Wallstreetbets user bought $30,000 of GameStop shares when it was trading at about $9 and doubled his money as shares rose. Instead of taking profits, he YOLO'd all of his gains into one last YOLO in $30 strike calls expiring January 15, 2021. This was an extremely optimistic target for GameStop stock, as its peak on December 28th was only $21, meaning the stock would have to increase more than 40% to reach its strike price. Over the past couple weeks, GameStop stock has pulled back from the highs to less than $18 a share, causing his calls to tank in value, ultimately causing this user a $54,000 loss. Luckily for this YOLOer, his partner is a doctor and he has 2 streams of steady income, so he can still live comfortably after this loss. Furthermore, he already saved enough money to send his kids to college, and the money he YOLO'd on GameStop was just extra money that was unallocated in the family budget. And it's technically not over for his call, as it is still theoretically possible for GameStop to reach the $30 strike price. This would require the stock to double in the next week. Some Wallstreetbets users think there is still a 50-50 chance of this happening, but even the OP thinks there is only a slim chance, saying such an extreme price movement would require a glitch in the matrix. This may actually be possible, as Elon Musk says we are most likely living in a simulation. Alright guys, that wraps it up for this video. If you like the content, make sure to follow us on TikTok, link in the description below. Also don't forget to like, subscribe, and share this video. We'll see you next time. Wall Street Millennial, signing out.